we're seeing a seasonal turn in the battle between greed and fear across world markets. We're especially seeing this in big changes in trend between the way stock markets are trading and the way gold is trading. Historically, we look at the markets as a battle between the bulls and the bears, between greed and fear, and there's seasonal changes in this sentiment within the markets over the course of a calendar year. The first half of this year, as is normal, has been quite strong. We didn't get as deep a spring correction as we often do, but we did get the July bounce that we often do. We're now heading into mid-August to mid-October, which is the seasonally weakest and most volatile time of the year for stocks. It's also the beginning of a positive season of the year for trading in gold. And as we see these shifts play out, it looks as though we could be in for some significant changes in trend in the coming weeks. So to start with stocks are the measure of greed in the marketplace. As people are bullish and enthusiastic, they tend to plow into the stock market and buy up stocks. And we saw this, a big rally at the end of last year, good for common seasonality after the U.S. election. We had another run up through about the beginning of March, some consolidation. But what's interesting is usually we get a pullback in May and June. This year we saw markets continue to decline and right through the summer earnings season, and the U.S. market peaked here at the beginning of August. However, in the last little while, we have seen the Dow start to roll over. We've had a couple of big down days. We're seeing our RSI momentum turning over as well. It was overbought, so a correction was due anyways, but now this time we've seen it break under 50, which is indicative of the beginning of a potentially deeper downturn. We've got the Dow back trading around 21,695. Its 50-day average here is about 21,645. 23% retracement of the post-election rally. It could take you back closer to 21,000 or 21,090. So the Dow is still looking vulnerable as we head into the late summer. Similarly, we're seeing the DAX starting to roll over as well. The DAX actually peaked in June, and it's been trending lower since. So it didn't even take part in the summer rally that we saw in the U.S. market. We've seen upward momentum fading here for a while. This is a pretty strong double top, kind of a weak head and shoulders top here. But the point is, though, that it looks as though stocks in Europe are also coming under distribution. For further confirmation, we're seeing the S&P 500 rolling over and the NASDAQ 100 also showing signs of peaking and rolling over. There's a few other things too. As the U.S. bull market progressed, we saw the breadth decrease and decrease. People started talking about the 5 NASDAQ stocks that were driving things higher. And eventually, by the time markets peaked, we got to the point where it was one stock. It was Boeing that was continuing to push the U.S. market higher when everything else was going down. So now we're moving into a time of greater uncertainty. There's a number of potential flashpoints or triggers that could turn sentiment bearish in the coming weeks. The most important thing is that so far we've seen the politics and the economy haven't exactly been going on the same page. And what I mean by that is the economy has remained strong while there's been a lot of political turmoil and noise and strife in the United States. In the coming weeks, however, the politics and the economy could smash into each other. The reason being, the U.S. is heading into budget negotiations. They're going to hit their debt ceiling. There's going to be talks about tax reform, talks about infrastructure, all the things that people thought Trump could do that really drove the bull market are going to likely to come to a head over the next couple of months. And there's a really high possibility that we could end up with a U.S. government shutdown to end up sorting out all of this mess that looks like it's coming. And the shutdown's a possibility for October. So this mid-August, mid-October timeframe, we could see quite a bit of U.S. domestic political and economic turmoil hit the markets in this time frame. So there is the potential for weakness. So we're seeing that greed is slowly being replaced by fear in the stock markets. We're also seeing the opposite effect in gold. If stocks are the epitome of greed, gold is the epitome of fear. Gold is a defensive haven. Gold is seen as a store of value. Gold is where people go when they're worried and fearful. And what are we seeing? Fear is gaining at the expense of gold. The big post-election rally we saw in stock markets big post-election sell-off in gold. We saw the recovery in gold in the first part of the year, and for the last 4 months, it's basically been going sideways here, swinging up and down in a channel between about 1200 and 1300. It's been trying to break out here, but it really needs to decisively clear 1300 to signal an upturn. If it does, gold could be off to the races. The next resistance level here is around 1345, and then up closer to 1370. A measured move out of this 1205 to 1295 channel is about 1385. We are seeing gold is broken out of a downtrend. It's not overbought as well, and so upward momentum at this point remains positive, and we're continuing to see this trend of higher lows. If, however, gold fails and turns back downward, you'd have a triple top in place, and you could have a downswing that with first support here is about 1270, and this support here about the 50-day moving average is closer to 1250. There's a number of things in the coming week or so that could move the markets, and with earnings season now over, likely to see more of a focus on politics. Monday, we have military exercises with the U.S. and South Korea. We have a total eclipse across the United States. Later in the week, we have the Jackson Hole Fed conference, and there's potential for lots of chatter and noise and fire in between. So it certainly looks like we're heading into an active time for both stock markets and for gold, with a big shift in sentiment underway.